Thank you for staying tuned. It's another wonderful day and it's Business 360. My name is Blyden Okem. Welcome to Business 360 on Spectrum TV. In today's edition of Business 360, we'll be looking at the key factors driving the market and businesses, not just the market, knowing that today we're coming from a weekend and it's another business week. Information drives businesses and global businesses stand based on a strong root on information. That is why we're talking about business around the globe and the economic implications of all the factors, including the Russian war, on businesses around the globe. Economic disaster is looming if Russia cuts off its fuel supply to Europe. Russia is choking off Europe's natural gas supply in a bid to hit back at Western sanctions. It cuts the capacity of the Nord Stream 1 pipeline to Germany to just 20% last month, contributing to the continent's energy crisis. Key gas benchmarks have soared since the start of June, with TTF Dutch natural gas futures surging 129% to 194 euros per megawatt hour. But Nord Stream 1 isn't the only pipeline that provides gas. Gas fields in Azerbaijan, the North Sea, and Northern Africa are also key sources of energy for Europe. Many European countries also import liquefied natural gas by ship, and the US now sends more supercooled gas by boats than Russia does by pipeline. It's a key factor affecting the market and affecting Russia and European ties because of the problems in Russia. These sources and the difficulties or the stoppage of this gas supply to Europe can cause impending problems. Well, talking about big businesses, hundreds of workers at some of Amazon's UK's warehouses have been holding protests after being told they are getting a pay rise of just 42 cents an hour despite soaring inflation. The retail giant's decision sparked walkouts and protests at its warehouse in Tilbury, Bristol, and Coventry, as well as Dartford in England. According to the GMB union, protests had spread to other depots, leading to different difficult situations in the UK. Just told staff that they would need to wait until October for a pay rise, but they found out on Thursday that they were increasing the hourly rate by 42 cents an hour. Workers are complaining about it. Worker by said an increase of 42 cents is insulting because of our hard work. They can't operate without us. Another said their working conditions are horrible. They are always working under pressure and being pushed to reach targets. Talking about businesses and has given a current data on its unemployment rate. A Swiss jobless rate stays at 21.5-year low. The Swiss unemployment rate stood at just 2.0% in July 2020, the same as in June, which was the lowest reading since November 2001. The number of unemployed people declined by 1,037 or 1.1% to 91,474. Meanwhile, the youth unemployment rate measuring job seekers between 15 and 24 years old aged up to a 4-month peak of 1.8% in July from 1.7% in June, with the number of young unemployed increasing by 331 or 4.3% to 8,089. Adjusted for seasonal forces and factors, the unemployment rate was also at 2.2% in July, the same as in the previous 4 months. You can't depend on jobs alone without having an understanding of what's happening in the energy market. The impact of the energy market is increasing as oil hovers near 6 months low. WTI crude futures consolidated around $89 per barrel mark, not far from an almost 6 months low of $87 hit last week amid a weakening demand outlook. Data released over the weekend showed that China, the world's top crude importer, imported 9.5% less oil in July than a year ago as refiners reduced inventories amid slower than expected demand recovery. Weak Chinese data followed U.S. government figures last week, pointing to a growing U.S. crude inventories and declining gasoline demand. Still upbeat, U.S. labor and Chinese export data helped ease some concerns about a demand-sapping global recession. It's not easy. Oil prices are still going up. But talking about the different markets, let's have a look at the energy market as coal hits a 3-month low. Newcastle coal futures, the benchmark coal futures, talking about benchmark for top consumers and consuming region Asia, extended that downward momentum towards the $350 per ton mark, a level not seen since May, pressured by increased supply prospects. China, the world's largest coal consumer and producer, announced that it would boost domestic production to ensure its energy security in a tight global market. At the same time, it is also signaled that it could lift a nearly 2-year ban on Australian coal as tensions ease while it seeks to replace shipments from Russia. Still, coal prices are poised to remain elevated amid robust demand and persistent global supply disruption exacerbated by the war in Eastern Europe, talking about the war between Ukraine and Russia. Europe is now turning to seaborne coal from South Africa and even as far away as Australia as it holds imports from Russia. Well, on the other hand, demand for coal in India, the world's second biggest coal importer behind China, is expected to rise almost 10% in 2022 as the country's economy expands and electricity usage increases. We'll be looking at a quick complex situation that's happening in the market this early morning. We know that the market is sometimes going up and going down, but a quick look at the energy market and what the market is doing, talking about crude oil, coal, and all other energy commodities in the world. And a quick look at it shows that crude oil is at 88.4 or $88.33 per barrel in today's market, talking about the WTI crude oil, the US crude. And a basic change of 0.65 drop in today's market, which is a 0.78% negative. On a weekly basis, crude oil has been falling for 5.82%, and on a monthly basis, 12.64%. Not to talk of yearly, it has been a massive year increase of 33% for crude oil. Looking at Brent crude is a similar situation, a drop in today's market at $94.498 per barrel. Brent crude is Nigeria's price benchmark for Nigeria's crude oil, and it's dropping at 0.39 points difference in today's market, a 0.41% drop. But looking at other markets like gasoline, natural gas also facing a drop, a negative 2.31% drop, and gasoline seems to be the market that is gaining this early morning at 0.62% gain, currently at $2.87 US dollars per gallon, hitting a 0.62% increase. Other markets like coal that we've talked about is at $361 US dollars per ton, a 29% drop, a huge drop for coal this morning at 7.44% drop. And we're looking at other markets, ethanol a bit going up, and methanol the same thing going up by 20 points. Urals oil at 4.79% upward movement. Still looking at the market, we'll move straight to the metal market and what copper is doing in the metal market. Copper holds advance on falling stockpiles. The copper futures held up near $3.55 per pound today after jumping more than 2% in the previous season and session rather, as declining inventories and robust trade data in top importer China outweighs concerns about a demand-sapping global recession. Data released over the weekend showed that China's copper imports rose 9.3% in July from a year earlier, as a sharp drop in prices spurred strong buying interest amid dwindling domestic inventories. Copper stockpile in warehouses tracked by a Shanghai Futures Exchange dropped 79% since March to 34,768 tons, the lowest since January 28. Meanwhile, investors remain cautious as a surprisingly strong U.S. job report last week boasted the Federal Reserve's firm hawkish stance, as U.S. inflation data due on Wednesday could offer more clues on the Fed's rate hike path. A lot of investors and analysts are looking forward to what the Federal Reserve's hike would be, what the interest rates in the coming month would be. But it's exciting what the market is doing so far. And looking at the metal market, a quick look at the metal market and what other metals are doing in the market. We begin with gold on the metal market. Gold price is at $1,776.52 US dollars per ounce, an increase in today's early market of 2.35 basis change, a point change in today's market, just a 0.14 percentage change in the positive. On a weekly basis, gold has been going up 0.27%, also 2.47%, and on a monthly basis and year on year, basically 2.72%. Gold is regarded as a safe haven global, especially in times of war. Gold market has been relatively up this year. Looking at silver, similarly, the same situation with silver. Silver at $20.1 dollars per ounce, and an increase of 0.225 points, a 1.13 percentage increase in today's market. Copper similarly at 3,555, 3.5531 rather, a drop of 0.001 points, just minimal drop in today's market for copper. But talking about steel has shown reasonable increase at 69 points increase in today's market, but at $4,130 per ton, a 1.7% increase. Iron ore on its own has shown a reasonable drop in today's, not much anyway, 0.5 points drop, a 0.45% drop. But talking about lithium, which is used for batteries, a current price at $476,500 per ton. No reasonable increase in today's market. That's all on the metal market and what it could bring. Looking forward to the New York Open that's opening around 1:30 to 2 o'clock. Talking about the New York market. Currently, the market is on the Asian market and up into the London market, which is similar to Nigeria's market, where a lot of workers are going to work and participating in the global market. But at this point, we'll go on a short break. When we return, Business 360 continues looking at African businesses as Tanzania's central bank proposes liquidity mop-up amid rising inflation, as well as a key outlook on the European stock market. Thank you for staying tuned. The break was short, just like business had to move in a fast pace. We'll be looking at Tanzania's central bank's proposal. Tanzania's central bank proposes liquidity mop-up amid rising inflation. The Monetary Policy Committee MPC of the Bank of Tanzania has agreed on a plan to mop up excess liquidity on the country's economy in a bid to tame inflation. According to a statement released on Saturday, the move would also help to safeguard Tanzania's economic growth. The Apex Bank did not, however, give many details on how it intends to go about the planned liquidity reduction. Interestingly, Tanzania currently has one of the lowest inflation rates in Africa. As of June 2022, inflation in the East African country accelerated to 4.4% from 4% in May. According to reports, this is the highest level recorded since November 2017. Hence, they're having the worry. Inflation in Tanzania is still very low compared to the likes of Sudan, Zimbabwe, and Ethiopia, where inflation rates are as high as 258.4%, 191.6%, and 33.5% respectively. Talking about inflation in Nigeria is the same thing. Inflation is high in Nigeria, about 18.8% in Nigeria comparatively to what is happening in Tanzania. And a Nigerian would typically wonder why they are complaining. But talking business and businesses in Africa and Nigeria, Polaris Bank dismisses report on planned sales by CBN, saying it is circulated to cause panic. The management of Polaris Bank on Friday dismissed a report that the bank was about to be sold to a private investor by the Central Bank of Nigeria, CBN. Report emerged that the CBN governor, Godwin Emefiele, and the head of Asset Management Corporation of Nigeria, AMCON, Ahmed Kuru, had agreed to sell Polaris Bank to a farmer, Alwal Lawan Abdullahi, who is the son-in-law of former military dictator Ibrahim Babangida. CBN took over the then Sky Bank in 2016 after accusing the bank's chairman, Tunde Ayeni, and the managing director, Timothy Oguntayo, of money laundering. Sky Bank had failed to meet the CBN's recapitalization requirement in 2016, and both Ayeni and Oguntayo forfeited 15 billion naira in cash and properties as part of the settlement deal with the Economic and Financial Crimes Commission, EFCC, which had filed charges of money laundering to the tune of 25.4 billion naira against the duo. The Apex Bank transformed the lender into Polaris Bank 2 years after, and since the takeover, Polaris Bank has not been sold back to the private sector, with both CBN and APCON reportedly spending 1.2 trillion naira to finance the bank's operation. That's serious. In a statement on Friday, the management of Polaris Bank said, while the plan was to eventually allow a private investor to take over the bank, it would not be sold without its approval. The key factors talking about banks and investment, will be looking at First Bank's investment as a lost 1.79 billion naira in 5 days of trading, coupled with the FCT High Court Enforcement Unit in Abuja, shutting down the operations of First Bank over a debt. The officials stormed the headquarters on Friday to seize properties of the lender, a garnishi order against the bank, which it didn't comply with, according to reports. According to NAN, the lender didn't comply with the court order, hence court officials visiting First Bank headquarters in Abuja were towing vans to seize properties such as standby generators and Hilux vans. Also, air conditioners, amongst other valuables, were carted away from First Bank to make up for the undisclosed debt, with workers of the commercial bank stating that the situation was embarrassing. And we'll go to the stock market at the moment. It's the European stock market. Stocks are higher, data and earnings are in focus. Major bourses in Europe kicked off the week in the green, with the DAX adding 1% and the stock 600 0.7% added. It led by a cyclical and growth stocks as investors await fresh economic releases and more corporate earnings to assess the economic outlook and risks of a recession. Recession is worrying all over. On the data front, US inflation and UK GDP will be in the spotlight later in the week. On the corporate front, shares of Valia were up more than 3% after the utility company confirmed it will sell Suez UK West business to Australia's Macquarie Group for around 2.4 billion euros. On the other hand, Siemens Energy was at negative 0.5%, warned of a bigger than expected net loss in 2022 due to the restructuring of its business in Russia. A lot of businesses are going through this turmoil in Russia, and it's affecting all around the globe. But looking at businesses and a quick outlook, we'll have a view of the African stock market, because you can't be talking about European market without having a good look at what's happening in the Nigerian stock market. So let's have a look at the African stock market. Beginning with Nigeria, the NSE All Share Index was at 50,723. 50,723 index level. But it's a change in today's market at 8 basis points. A simple change, not much. Market is still early, we know. Market closes around 2 a.m. But not much. Probably before we get to 2 a.m. we'll be in a critical positive position. But right now it's at 0.02%. And on the weekly basis, we've seen Nigerian stock market do quite well at 1.55% gain. On a monthly basis, it's been negative. We've followed the market all through, and it's a negative 1.64% drop. Not to talk of the yearly performance of the Nigerian Stock Exchange as a quick look at 31.52% gain. It shows even in economic difficulties and turmoil, the Nigerian stock market has been doing and performing so well this year. Looking at other market, the South African all-share market is being at 69,690. It seems to be the highest in terms of volume in Africa, and 17,171 level change in terms of points, a 0.25% increase and a 1.52% increase in this week's market performance. The Egyptian Teti is at a drop in today's market at 9 points drop, a 0.09% drop. And looking at Nairobi, the Kenyan's Nairobi 20 is at 1,727, seem to be a closely low related market compared to Nigeria and South Africa at 1,727 all-share index. An easy increase of 7 points is 0.42%. Looking at Tunisia's market also is a similar one at a 4 points drop, a 7,745 all-share index points, a negative 0.05% drop. And it's the key to what's happening in Africa. The market outlook gives us a good outlook to what might happen at the end of the day. And the performances are what you've seen. Some are going up and some are going down. Whatever goes up, they say, must surely come down. This is where we draw the curtain on today's Business 360. Information rules the world. Till we join your way tomorrow on Business 360, don't go anywhere. News at 12 is up next. My name is Mike.